Hey everybody, how's it going? Americans are raiding their 401k retirement accounts, and it's actually worse than I had reported previously. My name is JJ, you're watching Bull, Boom, Bear, Bust, back here with another dose of economic reality. Quick note before we get into this 401k situation, it is a little bit worse than I reported. For those of you asking about the website that I used to put up, I used to link to this website that had all the news stories. It had all the links to all the news stories that I discussed, right? That's not there anymore. I took that website down. It was actually just too much time to keep it updated. I was spending more time on updating the site and putting the links in there than I was taking to do the videos. So I would take about 20 minutes out to do a video, 10 or 12-minute video, editing, upload, 20, 25 minutes. But I was spending 30 minutes on updating the links on this website, right? So I took the website down. I just don't have time for it. And a very small percentage of the people on this channel actually went over and looked at the links anyway. So all you have to do is just listen to my reports and I'll tell you exactly where I'm getting the information from. Just a quick update because people were asking about that. Let's get into the story here. So this comes out of CNN. It was widely reported. Many different publications talked about this. But what I had reported in my last video was that there was a 28% increase since the beginning of the year in people taking out hardship withdrawals from their retirement accounts. Turns out it's actually much worse because I didn't count the October numbers, and so far here in November, it looks to be up another 10% just in the last month and about 10 days. So it's going to be much worse. We'll see at the end of the fourth quarter how bad it is. But people are taking emergency withdrawals out for a reason. And I think we all know what the reason is. Of course, if you ask Jerome Powell and people, high up in the financial system, they won't admit this. They're saying that they're winning the war on inflation, that everything's fine. But it even says right here out of this article, Lisa Margison, Managing Director of Bank of America Retirement Research and Insights Group, said a rising number of 401k distributions are caused by high inflation and the rising cost of living, right? So if it's true what we're being told, that the inflation numbers are coming down, that everything's getting better, we're in a recovery, why are there an increasing number of people taking out financial hardship withdrawals from their retirement account? Right? It doesn't make any sense. And of course, if it doesn't make sense, it's probably a bunch of BS. Of course, I think everyone here on this channel probably sees right through it. And this is no shock, no surprise. But there might be a few people out there, with shocking look on their face. What? You mean the consumers are tapping emergency funds? Speaking of emergency funds, the banks are under an emergency rescue program that's been happening ever since March of this year, when some of the banks went down and failed. And you would think that in a declining inflation environment where things are supposedly becoming more affordable for people and getting better, you would think that everything would be just fine. But no, the banks are in big, big trouble. More people not paying back their loans, and that equals big trouble. Again, if the consumer was strong, why are we seeing a big uptick in people not repaying their loans or late payments and credit cards, automobile loans, foreclosures ticking up because of housing payments, right? Everything you see is headed in the wrong direction and getting worse, but yet, we're told again that everything's fine. Also, banks are tightening up. Bank loan volumes plunge. And this Fed rescue fund usage surges to new all-time highs. Again, this was the temporary bank program. Basically, they don't want to call it a bailout. I call it a bailout. It's an emergency funding program is the official name, or the name they like you and I to use. But really, it's a bailout. And when you look at how far banks are underwater on these loan portfolios, the amount is almost as much as the total bailouts that we saw in the 2008 financial crisis. But yet we're told that we're not in a financial crisis right now. But I beg to differ. I argue the opposite, that we are in a financial crisis, and it's much worse than it was back in 2008. And I think they're just doing a better job at covering it up. Now, banks are still loaning out money. You look at the Fed balance sheet, it is dropping. But if you look at the national debt, it's increasing by exponential amounts we've never seen before. I believe it was less than 2 months, we ran up another $1 trillion. Actually, no, just over a month, right? So if it keeps at this pace, we could be running up $10 to $12 trillion in new debt each year. And as a result, our credit rating has just dropped. And Bloomberg put this out. Biden officials reject Moody's shift to negative outlook on the United States. And of course, he blamed the other party here, the opposing party. So the USA had a AAA rating, yet we're the world's largest debtor nation. We told you in previous reports like this where there was downgrades that this was a complete and utter joke, right? So how could the world's largest debtor nation, we have the endless credit card, have a AAA credit rating? It doesn't make any sense. So because we have the ability to just create this money out of thin air, the creditors look at it as we can always pay our bills because we can just borrow more. But something's wrong with that, and we're finally seeing the repercussions of that with the cost of living being where it is right now. And even the average working person is waking up and realizing, hey, something's really, really wrong. Of course, the big blame got put on supply chain issues that we saw starting in 2020. So therefore, that was kind of the scapegoat for the inflation and the cost of living that we're seeing right now. And as far as the downgrade goes, take a listen at how it was worded out of the rating agency, out of Moody's. Quote, in the context of higher interest rates without effective fiscal policy measures to reduce government spending or increase revenues, Moody's expects the U.S. fiscal deficits will remain very large, significantly weakening debt affordability. In other words, the interest on our debt is becoming so much that pretty soon we won't even be able to afford the payment on the interest, let alone ever paying off the principal. I think all of us here know that the principal can never be repaid. And if you look at unfunded liabilities, $33 trillion in debt is nothing. Unfunded liabilities, we're talking over $100 trillion. Programs that can never be paid for, or if they are paid for, it's just going to be more borrowing. How much further and how much faster increases do we have to see in the debt before enough becomes enough? Who's going to finance all this debt? Many foreign countries have purchased U.S. debt in the hope of nice yields, but the yields are going to have to be larger and larger to attract investors. Now, we did see a big sell-off in the U.S. bond market, and actually I shouldn't say sell-off. We saw a big drop in the rate because some buyer came in, some pretty big buyer came in and bought up a whole bunch of debt. Who would that buyer be? Well, name the biggest investor in the world who never has to worry about making a bad investment because they can just create more money. And there's your answer right there on who bought up all that debt here. Well, let's get into some other news. We have this news here coming out of the mortgage industry. We have a large mortgage company, Mr. Cooper. Mr. Cooper got hacked, and they're saying that because of an attack, a cyber attack, that their systems were down. Major U.S. mortgage lender Mr. Cooper faces cyber attack. This is out of the Real Deal. Company told clients the attack came on Halloween. That's pretty scary, especially on Halloween. Mr. Cooper fell victim to significant cyber attack, forcing the company to temporarily shut down several key systems, leaving customers unable to make mortgage and loan payments. I wonder if they're going to get charged late fees, or if the company is going to waive all the late fees because the customers couldn't make payment. The system was down. The company's website notified the public on the breach, about the breach on October 31st, assuring customers that immediate measures would be taken to secure their data. I bet there's going to be a lot of people stuck with late fees, and maybe even I'm thinking they're going to get put on the foreclosure list still. And remember, Wells Fargo was fined a lot of money for trying to repossess or foreclose on people's homes that were actually current or not that far late on their mortgage payment. That was just one of the many deals with Wells Fargo where they had to pay a bunch of money and pay a bunch of fines. So pretty scary. And to think about, who did this attack? Could the same people or person out there that did this attack, could they do this to the entire financial system? I think the answer is yes. And I think we're going to be seeing a big blackout event coming in the U.S. financial system in the very near future. I'm talking in the next year, if I had to put a guess on it here. U.S. mortgage rate plunged by most in 16 years. We did see it breach 8%. That, however, has plunged back down to 7.61% And I told you they're likely going to try to keep this thing propped up. Um, we have big money out there able to come in and buy up the bonds and treasuries, which are needed to push down the mortgage rate. If it was real investors, and if it wasn't just, I think the Fed, the biggest buyer out there, the Fed, I think mortgage rates would have surged to 10, maybe even 12%. Who knows, maybe even higher, maybe 20%, because the purchasing capabilities of the central bank is so big, they can really keep these rates manipulated and keep them down. So 7.6 is still really high compared to over the past 10 years. But on a long-term scale, it's not that much. 7% is not that large of a rate. Home prices should be a lot lower than they are right now. Home prices should be at least 50% lower when you look at the affordability and when you look at just the struggle that a lot of people are going under right now. The cost of living, including homes and rents, both should be dictated or determined by the purchasing power of the U.S. consumer. But they've made this thing so twisted and detached from reality with all this manipulation and money printing that we still see the cost of living way beyond what people can afford. Normally, it's self-correcting. If something is unaffordable, people quit buying it. Therefore, the demand drops and prices come down to match what people can pay for it. But when you have endless debt creation and endless money created out of thin air, trillions of dollars at the click of a mouse, of course, they're always going to keep prices manipulated, and the cost of living is never going to come back to normal. That's why at some point we need to have sound money come back to really give much hope to a lot of people. Now, there's some people out there that are doing pretty good. If you're a wise investor and you know the game, you're probably doing better than most. I think a lot of us here on this channel are probably doing okay because we know the game, and we know when to invest, when not to invest, and when to have cash when things are looking risky like they are right now. I would definitely recommend, well, I shouldn't say the word recommend because we're not supposed to give financial advice. What I'm doing is I'm holding cash as much as possible, waiting for a correction, especially in the housing market. And I'd really like to pick up another house or two in the next downturn because I have some relatives that are going to be needing a place to live, and certain people in my family that are not able to work anymore and who kind of really need help, right? So that's my goal, is to acquire more property, not just as an investment or income, but just to help out family, because I think family should come first. Now, people out there that don't have family, you're going to have a lot easier time investing, because you can invest everything that you buy, every investment you make, rather, you can use that as a profit machine. So rental property, instead of having relatives live there, you can use that as a source of income. Or you could still have your relatives pay you some rent. A good friend of mine just had his mother-in-law move into a not a shed, but a kind of a tiny home shed slash, I don't know what you'd call it, but it's fixed up to look like a home, but it's really just a glorified shed. Moved the shed onto the backyard, and she gets Social Security, so she does pay him some each month. So to him, it's a win-win because it's just something on his property. He didn't have to construct it. It was a prefabricated, pre-built shed. And, she's paying him half of what she would pay if she was paying rent somewhere. See what I mean? So it's a win-win thing. So for those that are kind of savvy and have ways to still make profits and still help people, let's say you're helping your relatives, this can be a very interesting and even profitable time coming here in the U.S. economy. And it might even be a big wealth transfer to those that are waiting, to those that are prepared. Now, one of the big areas that I still get messaged on is silver. Hey, JJ, what's going on with silver? Silver will see its day in the sun. I'm thinking $100 plus. When that's going to happen? Well, first, the financial system has to implode. We know that all the banks are insolvent. Banks have been given basically a get out of jail free card. Now they can loan out as much money as they want to. They don't have to have any in reserves, but we're starting to see some signs that these banks may not be propped up forever. And I think we're even going to see one of the big mega banks fail, and that's going to send a shock to the system. That's just my opinion. That's not any news source out there saying that, but actually, do you want to just trust the news sources either? Because a lot of the information coming out of the news sources are pretty much BS. Like, look at all the talking points that are put out by the Treasury and the banks and the heads of these banks, that the consumer's strong, everything's fine, right? When we know just the opposite is true. Let's talk about the student loan situation. We have 2.9 million borrowers don't have to pay back their loans here. So pay nothing. And this is for certain borrowers. And this is being called the most generous repayment option ever afforded. And I'm wondering why they call it a repayment option when it says they have to pay back zero. According to the latest update from the U.S. Department of Education, 2.9 million are in the SAVE plans. Current enrollees have incomes that are low enough that they have monthly payments of zero. So the deal is, if you make less than $32,800 a year, you pay back zero. The same applies to a family of four that has an annual income of less than $67,500. So the deal is, you pay zero, but if you ever make more than that, then you're going to have to start making payments again. Pretty crazy. Imagine making slightly more than $32,800. Let's say you made $33,000, and now you're going to be kicking yourself and regretting working the overtime because you made $200 more for the year, but now you've got to pay these student loans back, right? So that's pretty silly when you think about it, but that's what they're doing here. They're forgiving a certain segment there that's making below that $32,800. So do you agree with that? Or do you agree that if somebody gets forgiveness, everyone should get forgiveness, right? So you're penalizing people for making a little bit more than $32,800. Maybe some of them are making a lot more, but the point is, I thought the whole point was going to be equality and equal treatment, but instead we pick the people that get the freebies and the handouts, and other people don't get them. I'm not saying that that's good or bad. I'm just saying that some people might look at that as unfair, especially if you're the one not getting it, and you see the next door neighbor sitting at home drinking a soda on the porch and smoking, and not having to go to work because they get things handed out to them. Anyways, the biggest problem is not the neighbor getting free stuff. It is the endless spending and the officials, quote unquote leaders, that are letting this happen and keeping most people in debt for life, keeping us as debt servants. And I guess we'll own nothing, and we're all going to be happy about that, right? So that's what they want. Everybody keep stacking, because we're going to stay on top of this, and we're going to come out ahead on the other side. All right. Oh, one other quick news article here. FedEx and UPS raising their rates. What do we see this year? We saw big pay raises come out of some of these delivery companies. And now you and I, the people that use these services, are going to be paying for it, right? So this is hurting businesses. It's hurting people. And the solution is to pay these people more. And that's a great solution, except now the companies are going to raise their rates for everybody. And that's going to cause people to need bigger raises, because the cost of living is going to go up even more. And people will be striking and complaining and moaning and groaning for more pay raises, right? The solution is to allow free markets, to allow deflation. Then the problem fixes itself. Prices come down to where people can afford, and the problem's fixed. But there's so much manipulation, and this hands-on approach to the economy is really causing a lot of distortions. All right, everybody. So what do you think about that UPS and FedEx raising their rates again? The variances within the carrier price hikes indicate what services are seeing the most pressure from competitors, experts say. The delivery giants announced a 5.9 average rate increase on their various shipping services. Another example of a number that's higher than the official inflation rate. If they would only count everything that people have to actually purchase, or the things that people usually purchase, not everyone has to use UPS or FedEx, but if they would count everything in the economy that people have to pay for, what would we see? I think we'd see between 20 and maybe even 30% inflation. But hey, let's believe the 3.7 number for now until the October number comes out. It'll be coming out very soon, and we're going to talk about that at that time. Everybody, we're going to wrap it up. I promise I'm done this time. Keep stacking, everybody. Free markets, sound money. Remember, always advocate for those things, and talk to your friends and family about these things. Point them to videos like mine, and start the discussion, because these things need to be talked about. And finally, we could see some economic reality and a little bit more sanity enter this market here, enter this economy. All right, everybody. Bye for now, everybody. I'll talk to you soon.